Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 955A, and today's date is April 26, 2016, and the title of the episode is Confidence in the Government is Declining. Economic Indicators Show the Economy is Finished. Let's get right into the economic collapse financial news. Now, all the indicators that we've been looking at, all the economic indicators, they've been slowly declining. And every day it's getting worse and worse and worse. It's not improving. Yes, we do have the little dead cat bounce, but it drops right back down. And we're seeing that over consecutive months, things do not look good. Now, the government, they have the Conference Board, which they fund. This shows consumer confidence. And usually this is completely the opposite of what the Gallup poll shows, which is the Gallup poll is the people's poll, where they go out and they do a survey amongst the people. And you know, once the Conference Board starts declining, we are in big trouble, because that means they're losing control of the narrative and there's no way to convince everyone that everything is still fine. So right now, the Conference Board, they were expecting 95.8, and that has dropped to 94.2. And this is the lowest in 2 years right now. And the Conference Board is saying that they're not seeing any type of pickup in the momentum of consumers anytime in the near future. Now, if we look at the Gallup poll, well, this is even worse. And it confirms the Conference Board, which is funded by the government. Well, actually, it should be the other way around. The Gallup poll is the true measure because they're going out for the people. And now the funded Conference Board is confirming Gallup's poll. And what we're seeing right now is that the Gallup poll is at 8-month lows. And it has dropped from -12 all the way down to -16. And this was a 4-point drop. And the last time the score was lower was August 2015. And we can see right now that this is continually declining. People are not confident whatsoever. And things are rapidly falling apart. Now, what's very interesting is that the government is continually trying to convince us that employment is still good. And what we've been showing is that their employment numbers don't make any sense. I mean, yesterday we talked about Credit Suisse, and we talked about the retail numbers, how there's huge amount of layoffs. And we see there's a study where we're looking from 1985 to 2000, and we see that there were employment gains. And we see during the same time, we saw wages go up, and we saw the economic growth continually move up. Now, if we look at 2000 to 2016, we see the opposite happen. Now, if employment is growing at the fastest pace since 1990, then wage growth, and by extension economic growth, should be much stronger than what we're seeing right now. So, of course, something's wrong. So if we are truly experiencing this strongest streak of employment growth since the 90s, should we not be witnessing the following? We should be seeing a surge in wage growth, because we know the unemployment is around 5%. And this would give employees, this would give the everyday consumer pricing power. We should see economic growth well above 3%, because the 5% unemployment leads to stronger consumption. A rise in imports as rising consumption leads to demand for goods. Falling inventories as sales outpace production. Rising industrial production as demand for goods increases. We should be seeing all of this, but we don't. Now, very interestingly, between April 2003 until August 2005, we saw unemployment continually dropping. We saw economic growth. Retail sales accelerated, and it all made sense. Then we come to now, the present, where we have the unemployment very low. They're telling us everyone is working, and we see the opposite happening. So something really doesn't make sense. And we're starting to see that the government illusionary statistical numbers, they're moving further and further away from reality. And people are starting to catch on. This is why we see consumer confidence dropping. This is why the people are saying, okay, something's wrong with this economy. It doesn't make sense. And what we're seeing right now is that this whole entire system is one gigantic illusion. And the illusion right now is falling apart. There are more and more people being laid off left and right here. We see Freeport, they're firing about 25% of its oil and gas workers. And we're seeing a lot more companies now. They're starting to lay off thousands upon thousands of people. Department stores here in America, we're going to see hundreds of them close. We're starting to see Sears, JCPenney, Macy's. Nordstrom says, you know what, we're done expanding. We're going to concentrate on the rack discount chain. Why is that? If all the people are working and they have great jobs, why is everything contracting? Because they realize these jobs are low paying. People can't find the full-time, great paying jobs. And if they can't find the full-time, great paying jobs, what happens? They don't have the discretionary funds. If they don't have the discretionary funds, guess what? They're not going out to buy the high-ticket items. They're going to the discount stores. They're not going to the expensive department stores. And this is why we see a lot of them starting to fall apart and close down. And this is going to continue. Now, in the housing market, we're seeing the bubble start to fall apart. The housing bubble that the central bank, the U.S. government created, is starting to fall apart right now. For the fifth month in a row, Case-Shiller home price growth year on year, well, that completely missed expectations. February saw prices at 5.38%, below the 5.5 expected. And this is the weakest annual growth since September of 2015. Now, San Francisco and Seattle, they rose the most. Cleveland and New York, they saw big drops month on month. And if you really look at this, we see that 13 of the 20 cities saw slower year-over-year numbers compared to last month. So what we're seeing right now is the prices are starting to level off in many areas. A lot more now, they're starting to fall. A lot of them are staying level. Because remember, the central bank, the U.S. government, they can't control the entire country. They pick certain cities to pump up. And the outskirts, everything bordering those areas, they creep inward. And those areas that weren't affected, they're not part of the bubble, all of a sudden we see major things starting to happen where prices are coming down rapidly. And if you look out in the east and you look at many of the states there, outside of the cities, you see that housing prices, they are falling apart. Now we see new home sales declining. We see starts declining, permits declining, existing home sales declining. And what we're seeing right now is the housing market fall apart right in front of us. So we've seen the Philly and the Dallas Fed, they have been declining. Yes, they had that little bump up in Philly, but that has come straight down. The Richmond Fed right now, they've had their biggest drop since August. Shipments, new orders, wages, all crashed. And everything's starting to fall apart here. We see core durable goods. They have tumbled for the 14th month now. This is absolutely awful. This is your washers, your dryers. And they expected that this was going to be a lot better than it really was. So what they did was, is they went back in time, they revised the numbers downward for February, so March wouldn't look so bad. Now, orders rose just 0.8% month on month. They missed the expectations of 1.9%, and they got that 0.8% by revising the numbers in February. If they didn't revise those numbers, it would be way down. Because in February, we saw the numbers at 2.8%, and they pushed them down to 3.1% negative. So right now, we're in the 14th consecutive month where we're seeing declines. And this is a streak never seen in the 60 years outside of a broad U.S. recession. Now, I think we're way past a recession at this point. this scenario that we've been talking about, we have been in this depression collapse scenario for quite a while. Now, I know the government's not going to come out and just say, hey, everyone, we're in a recession, depression. They're not going to do that. The only time they will most likely do this is when the market comes tumbling down, when they lose complete control. And even at that point, they're going to wait a little while. If you remember back in 2008, they didn't come right out and say, hey, yeah, we're in a recession, man. We're sorry about this. No, they waited a little bit to see if everything would go right back up, if they were able to push it back up, and they couldn't. So this time, it's going to be much, much worse. Now, what's very interesting is that ExxonMobil, they've been rated AAA by S&P since 1930. And today, that ended. They cut their rating down to AA+. And this is the first time since the Great Depression. So this is not a very good sign here. And Bank of America right now is continually telling us this is the 13th consecutive week that the smart money, they're leaving the market. They were net sellers of U.S. stocks for the 13th consecutive week. Now, we're seeing institutional and private clients. They have been consistent net sellers since February. Clients sold stocks in all three size segments. And this is huge because we haven't seen anything like this since 2008. And when we look at this, things are actually accelerating at this point. If you notice, the market now is really fluctuating. They can't suppress gold that much. Gold continually pops back up. The Atlanta Fed is looking and doing their calculation, and they pushed the GDP back up to 0.4% now, saying that we had really good durable goods. Now, of course, as we know, these numbers were revised. We know that retail looks awful. The durable goods looks awful. The Philly Fed, the Dallas Fed, the Richmond Fed, all awful. Manufacturing declining. So what made them push it up to 0.4%? Well, who knows? But I don't see where they're getting it from at this point. It looks absolutely horrific at this point. And as we go forward, we are going to see the economy continually accelerate in the downward trend. And it is not going to get any better. Actually, during this point, we know that retail, we're coming into one of the weakest time periods in retail sales. We also know in the housing sector, spring and summer usually is one of the good times there where they sell homes. But already we're seeing a downward slide in housing sales, which is not a good sign whatsoever. And I don't think this is really going to pick up. Will we see a little bump up and then a huge decline? Yes, but if we notice and we go back in time, each summer leading into winter, the housing market declines even further and further and further each time, and it's not making any gains whatsoever. And it's getting worse and worse as time goes on. Now, we've been looking at all these economic indicators, and all of them now are pointing to a major problem in the economy. And at this point, everyone should be ready for what is coming. Because we're starting to see that they can't suppress gold like they used to. They're not really pushing it down. They're trying flash crashes. They're dumping paper contracts, but guess what? It's just not working. There are too many people purchasing. And at this time, gold is holding its own. And this is a signal that's telling us that we're coming to a major, major catastrophe. And this is going to be a huge problem for the U.S. government. And at this point, everyone should be preparing for what is coming. You should be getting your food. You should be getting water. You should have batteries. You should have a weapon. You should have gold and silver. And I know it's tough for many people. I know a lot of people don't have a lot of money. I know it's very tough to live every single day. But listen, if you can't purchase gold, get silver. You don't have to buy a 1 ounce coin. You can buy a half an ounce. You can buy junk silver. But whatever you do, put a little aside just to get that. Because if that increases, I should say, when it increases, you're going to be very happy that it did. Because we're already seeing what is coming. And now, Jim Rickards and we see many others are talking about gold and silver rising very, very high. Now, as the dollar loses its value, this is exactly what we're going to see. And this is a way to protect your wealth. Now, if you haven't started preparing, you can go to lifereliance.com. They have bug out bags, they have water filtration systems, they have emergency foods, you can customize your orders. But whatever you're doing, it doesn't really matter at this point. Just keep doing it. And if you've been purchasing gold and silver, don't stop. If you've been purchasing food, water, medical supplies, toiletries, this is not a time to stop doing this. Because we all know what's going to happen at the point when things start to fall apart. Look at Argentina, look at Brazil, look at Venezuela, look at Greece. What's going to happen, and Bill Holter has said this many times, the credit markets are going to freeze up. Supplies are going to stop coming in. We're going to see bare shelves. And this is going to be a disaster for many, many people. And this is why everyone needs to continually be prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.